What's up guys, today I'm going to show you how you should play the ICT Silver Bullet between 10 and 11 a.m. I had a really hard time playing this model in my previous days, and here are the conditions that I made for myself in order to have a higher win rate and see some success with this model. So first off, you need to trade between 10 and 11 a.m. Okay, super important because it's the next 4-hour open. You will understand later. Then you also need a sweep of liquidity, so a sweep of a high or a low. You need to see an SMT divergence between ES and NQ on a 15-minute high or low. Then you need displacement and a fair value gap creation, and you want to be entering inside the fair value gap on the M1 or the 30-second, and you want to aim for a 1-to-1. So first thing you want to do when you are approaching that silver bullet hour is marking out your 15-minute highs and lows. These highs and lows are going to be the levels that you want to play reversals off of. So let's say in this example we have this high here, this low, and this low. So I would want to see a sweep of this high on NQ and not on ES, so that would create an SMT divergence. I want to see a fair value gap created right after, so seller is stepping in, and I want to enter inside that fair value gap and predict that we're going to break this low here. This is basically the scalp model right here. We have another example that can happen is ES going for this high, going to sweep this high and not NQ. So NQ would just stop right here and would start displacing to the downside, creating a fair value gap, and then you would enter right there. So there's basically two scenarios, either this one, so we create an SMT with this high, so we don't sweep this high but ES sweeps it, or NQ goes and sweeps this high, SMT with ES, and then we aim for the break of the low. These are the two possible scenarios we can see. And also for the buy side, let's say we could see a sweep of this sell side liquidity and not on ES, so an SMT divergence at this low, bullish SMT, and then a fair value gap created. Or we could see also ES sweeping this low and not NQ, so price would stop right here, and then a fair value gap creation, and then we would aim to break this high here. This is really the scalp model right here. So in this example, you see we are going to open in 1 minute on that silver bullet hour, and what ended up happening here was that at 10 we went and swept this high, but ES went and swept the 15-minute high that was created at 9:32 here. So we have a bearish SMT divergence. Right after that SMT was created, I'm looking for price to shoot down, create a bearish fair value gap, so an imbalance to the downside. I want to enter inside that imbalance and aim for a 1-to-1 and predict basically that price is going to break this low. So right here you can see price decided to displace down, have that market structure shift creation right after the SMT. And also one thing that is super important is the timing. Look at this candle pushing up at 10. We have this SMT divergence created at 10. We started to displace down, creation of that fair value gap. This is where we want to be entering inside that fair value gap to the downside, stop loss above the body here, and I want to aim for a 1-to-1 and predict that this low is going to get broken. So right here, enter inside of this fair value gap, 1, 2, and 3 minutes, and you hit your target. So this is the trade that you want to be taking between 10 and 11. So SMT divergence between ES and NQ on a 15-minute high, a fair value gap creation, displacement, fair value gap, enter inside the bearish fair value gap after a bearish SMT creation, and then you predict that the low is going to get broken. So you can see we are between 10 and 11, and I mark out my 15-minute highs and lows. So this is the high and this is the low, and right here I want to see price sweeping this low on NQ, not on ES, or the opposite. I want to see price starting to shoot to the upside and create a bullish fair value gap, displacement fair value gap, then enter inside the fair value gap and predict that price is going to break this high here. You can see in this example, price went and swept this 15-minute low on NQ, but did not sweep it on yes right here. So as soon as I see this, I have my confirmation that we could see a potential buy model. Then we have our market structure shift that happened right here. We have two super big fair value gaps. What I like doing in that point, when I see two big fair value gaps in a big range, I like taking my fib out and entering at 50% of the leg here. So at 50%, stop loss just below this low, and I want to aim for a nice little 1-to-1. So this would be the trade. You'd get tapped in right here inside of that candle, and in 6 minutes you hit your target. So here's another example. I mark out my 15-minute low and 15-minute high. I want to see price sweeping this high on NQ and not on ES. Then I want to see displacement to the downside, a fair value gap being created. Enter on that bearish fair value gap and aim for 1-to-1 and predict that this low is going to get broken. Or we could see ES sweeping this high and not NQ. So price would just stop super close from the high and displace, create a bearish fair value gap. You enter on that bearish fair value gap and you predict that this low is going to get broken. So these are the two possibilities right there. So right here in this example, we have this 15-minute high and low. You can see here NQ went and swept this high first at exactly 10:31. And look at what's going to happen. At 10:31 we swept this high, and I want to see an immediate reaction to the downside. I want to see a fair value gap being created right after this SMT was formed. So right here 10:31, look at this next candle. It's going to close bearish, immediate reaction to the downside, big push down. So this is exactly the moment I'm trying to look for my fair value gap. So right here I had a really big displacement right after the SMT was created. I know responsive selling is stepping in above this high. I just scaled down to the 30-second and I'm looking for a fair value gap either on the 30-second or the 1 minute. Right here we have a nice fair value gap on the 30-second. I'm entering it in the beginning of that gap, stop loss just above this high, and I aim for a nice little 1-to-1. That's the scalp model right here. I don't need more than that. I just predict that this low is going to get broken and that sellers are going to step in inside that gap to defend their position and create that break of structure. So right here, entry would be inside that gap, and in 2 minutes you hit your target. So reasoning for the trade, again, super simple. We mark out our 15-minute highs and lows. We wait for a SMT divergence between ES and NQ. We wait for a displacement in the same direction as the SMT. We wait for a displacement for value gap creation on either the 1 minute or the 30-second. We enter on that gap and we predict that structure is going to get broken because of all these confirmations. Thank you guys so much. Hopefully this video helped you out to understand the real ICT silver bullet framework, in my opinion, and adding some extra confirmations with the SMT to increase your win rate. Don't forget to like and subscribe, and also check out the link in bio of my YouTube. You can join my Discord, and also there's a free PDF on my Whoop account. So thank you guys so much. See you guys on the next one. Peace out.